actual GDP growth number actually slightly surprised on the upside in the fourth quarter. We were expecting, something around 4.9%, and the full year to be slightly below 5%, but they certainly came in slightly stronger. And then so the full year, around 5% target was definitely reached. I think this is certainly very encouraging, and a lot of that is reflecting the impact of the policy pivot since the end of September, as well as the export front loading right ahead of the tariff. But I think fourth quarter is behind us. I think a lot of the investor we have in mind is about, okay, then what's going to happen down the road, right? It's more forward looking. Is this going to be sustainable? I think when you look further into the details, I think there's more concern, right, about the vulnerability, the structural imbalance between supply and demand, the persistent housing, downturn, deflation deflationary pressure, and I think there's a lot of concern that some of the growth momentum will actually start to fade, when we get further into 2025.
This seems to be exactly what they had planned more than 12 months ago, given this is also set in December the previous year. And they had given themselves, Qian, some flexibility in that around 5% lingo. Yes. No doubt an encouraging headline, but I suppose controversially, how discouraging are some of the doubts about this, particularly when you've got really bearish calls from Rhodium Group, for instance, which has been suggesting that this is more so perhaps within the 2% range. No doubt this has become deeply political, but what does it mean for those who are doing business in China, investing in China? And not to mention some of the growing reports around the growing discontent amongst its own citizens with regards to the level of doubt and question marks over this data.
Yeah, I think, especially when you look at the China growth, right, the headline number, especially the real GDP, the real growth number looks fine. But I think what is more concerning is the driver of the economic growth, either because of the export front loading, which is definitely not sustainable, especially once the tariff is out. And then, consumption. Right, a retail sale actually seems to be surprising on the upside. But again, that mostly because of some of the trade-in subsidy program. And that actually is literally front-loading the future demand now, right? So that might not be sustainable either, especially if a government does not come up with a further additional aggressive, policy support for consumers and households. So I think for a lot of investors at this moment, the structural headwinds continue to weigh on the outlook of the economy, and without fundamental improvement in the job and income prospect, which really hinges on the business sentiment and animal spirit, then I don't really see a sustainable rebound in household consumption. So I do think there's still a lot of skepticism about China, in terms of the outlook, macro outlook, as well, given the structural headwinds as well as the external headwinds. That said, from an investor perspective, a lot of the bad news has already been, priced in, right? So yeah. China, from the valuation perspective, is indeed, quite attractive. So I think that's where making investor, wonder a little bit to say, okay, what should we do at this moment? And what is the right opportunity to get into the China in terms of the investment?